Hello, everyone. Today we're going to start chapter 2, which is a recording process. So we have learned in chapter 1 that there are 3 activities in accounting. The first activity is identification. The second one is recording. And the last one is communication. So we're going to learn about the second activity today, which is the recording process. Now, recording also has another term, which is bookkeeping. So basically, today we're going to learn how the accountants will record a transaction, how do they process to the ledger, and how do they prepare a trial balance. Okay. All right. So before we learn how to record a transaction in a journal, we should learn about debit and credit. So you have heard a lot about debit and credit. What does it mean? Does it mean debit means debt and credit, it means you have money? No, debit and credit only means left and right. And on the screen, you can see that this is a T account. Okay, we call it a T account form. So the T account has an account name at the top. On the left side, it has debit, and on the right side, it has credit. So again, one more time, debit and credit only means direction. Debit, it means to the left, and credit, it means to the right. Okay. And this T account we use it to keep track of the account, of the changes in the account. And this form of account we call T account, look like letter T, right? Debit on the left side, credit on the right side. Okay, so with this one we call it T account. So we have many different accounts. We have an assets account, okay, which is, for example, cash account. We have liability account, like accounts payable, notes payable. And we have owner's equity accounts, like, for example, owner's capital, drawings. Those are different accounts. Now, let's look at debit and credit. What does it mean? Okay, so let me share with you the Excel file. Okay, so last time we have learned about accounting equation. Assets equal to liabilities plus owner's equity. Okay, assets equal to liabilities plus owner's equity. All right, so and we learn about debit and credit, right, class? Remember debit and credit? Debit is mean left, right? And credit means right. All right. So what are on the left side of the accounting equation? Okay, we call debit. For example, assets. Assets is on the left side of the accounting equation. So when assets increase, we debit. Again, one more time. Assets is on the left side of the accounting equation. Okay, and because debit means left, so what is on the left side, we debit when it's increased. Okay, so when assets increase, we debit because it's on the left side of the accounting equation. Now, what about when assets decrease? Okay, when assets decrease, The opposite of debit would be credit. Okay, so when assets decrease, we credit. Okay, again, one more time. We have accounting equation. Assets equal to liabilities plus owner equity. Assets is on the left side of the accounting equation. And we just learned that debit means left, credit means right. So when assets increase, we debit because it's on the left side of the accounting equation, right? So what increase, we debit. And when assets decrease, the opposite of debit would be credit. So when assets decrease, we credit. Okay. Now, liabilities and owner equity, they are on the right side of the accounting equation. So when liability and owner equity increase, we credit. Okay, we credit. When liability and owner equity increase, we credit. And when liabilities and owner equity decrease, we debit because the opposite of credit would be debit. Okay, so when them decrease, we debit. All right. Okay. Let me give you some example. Okay. For example, I have assets other account, which is cash. All right. So when cash increase, we should debit. All right. Why? Because cash is an asset, and when assets increase, we debit. Okay. Another example. Okay. Accounts payable. Accounts payable, you remember, it means we owe money to someone. All right. We promise that we pay money to them in the future, and we haven't done that. Okay, so accounts payable is a liabilities. So when accounts payable increase, we credit. Okay, credit. All right. Again, one more time. We have as the accounting equation. Assets equal to liabilities plus owner's equity. So what is on the left side of accounting equation? When it's increased, we debit. What are on the right side of the accounting equation? When they increase, we credit. Okay. So when assets increase, we debit. When assets decrease, we credit. Okay. When liability and owner's equity increase, we credit. When liability and owner's equity decrease, we debit. Okay, now let's look at owner's equity. So last time we learned that owner's equity is influenced by 4 factors. Okay, right? 4 factors is owner's capital, owner drawing, and expenses. Owner's capital, owner drawing, revenues, and expenses. Okay, so owner drawings, owner's capital is about the investment of the owners into the business. Okay, we call it owner's capital, the additional or the investment of the owner into the business. So when the owner increase their owner capital, it means they keep investing in the business, then owner's equity increase, right? When owner equity increase, you remember? So when owner equity increase, we credit, okay? We credit. All right. And what about drawing? Drawings, it means the owner withdraw money from the business. So when drawing increase, it means the owner keep withdrawing money from the business, okay? Then owner's equity will go down, okay? It's decrease, all right? And when owner equity decrease, you remember when owner's equity decrease, we debit, okay? When owner equity decrease, we debit, right? So here we debit when we have withdrawing, okay? Withdrawing. Owners withdraw the money from the business. Now, next we have revenues. Revenue is mean the money that the company earned when they provide a service or when they sell something to the customers. We call it revenues. All right, again, revenues is mean the money that the company earned when they provide the service to the customers or when they sell inventory to the customer, they earn money. Okay, we call it revenues. So when revenues increase, it means our owner equity will increase. Okay, and when owner equity increase, we credit. Owner's equity increase, we credit. So here, when we have an increase in revenue, we credit. And the last one we have is the expenses. Okay, expenses. Expenses, it means those resources that you have to give up in your business so that you can generate your revenues. For example, you have to pay for the salary and wages expenses for the employees. You have to pay for the rent expenses for renting the office, or you have to pay for the gasoline expenses. So those expenses, when it increase, when they increase, it will cause owner's equity go down. Okay, it will cause owner equity goes down. So that's why when owner equity reduce, we debit. Okay, we debit. All right, so we just understand that debit and credit, it means direction. Okay, and then we remember about the accounting equation. We have assets equal to liabilities plus owner's equity. What are on the left side, when it increase, we debit. What are on the right side, when it increase, we credit. And when assets decrease, the opposite will be credit. When liability and owner equity decrease, the opposite of credit would be debit. Okay, so we debit. All right. And remember, owner's equity is influenced by 4 factors: owner's capital, drawing, revenue, and expenses. When owner's capital increase, it means the owner invests more money, then owner's equity will go up. Okay, and when owner's equity go up, we credit. Drawings. Drawings is mean the owners withdraw money from the business. The more he withdraw, owner's equity will go down. And when owner's equity go down, we debit. Okay. Revenues. Revenue is the money that we earn. Okay. Revenues are the money that we earn when we provide a service to the customers or when we sell inventory to the customer. So the more we sell inventory or the more service that we provide for the customer, then we earn more money, right? And so owner's equity will go up. And when owner's equity go up, we credit. Expenses. Expenses means the resources that you have to give up to generate your revenues. Okay, so when you have to spend a lot of money for the expenses, owner's equity will decrease. And when owner's equity decrease, we debit. Okay, so that is the general things of debit and credit. All right, so let me go back to the slides. All right, so we have a T account like this, okay? Now, remember for debit and credit, right? Debit on the left side and credit on the right side. So an account, it may record many transactions. So you can see here we have transaction number 1, transaction number 2, transaction number 3, okay? And when we want to find the balance of the account, we will take the sum of the debit, okay, because debit entry are greater. The sum of debit entry are greater than the sum of credit entries. So we take the sum of debit entries, we minus the sum of credits, and the balance would be 15,000, and it's going to be on the debit side because the sum of the debits are more than the sum of the credits. Okay, so we have 10,000 plus 8,000, which is 18,000, and minus 3,000, and that will give you 15,000. So 15,000 should be on debit, not credit, because the sum of debits are more than credits. Now, what about if the sum of credits entries more than the sum of debits entry? Then in this case, the accounts will have a credit balance. Okay, for example, here 3,000 plus 8,000 would be 11,000, and 11,000 is more than 10,000. So the credit balance would be 1,000. And it's on credit side. Okay, it's on credit side because the sum of all the credits are more than the sum of the debit. Okay. All right, when we record the journal entry or when we record any transaction, we will follow a double entry system. Okay, a double entry system. So what is the double entry system? The double entry system say that every transaction, it must affect 2 or more accounts to keep the basic accounting equation in balance. Okay, so every transaction should affect 2 or more accounts and make sure that your accounting equation is balanced. Okay, so there should be at least one debit and at least one credit. Okay, at least, okay, at least one debit and at least one credit. And the sum of all the debit should be equal to the sum of all the credits. Okay, because you remember the accounting equation, assets equal to liability plus owner equity, right? So the left side should always equal to the right side. So it means debits must always equal to credits. Okay, now we look at the normal balance. Okay, so the normal balance of the account normally will be on the increase side. Okay, the normal balance of an account should be always on the increase side. So for example, assets, you remember assets? Assets is on the left side of the accounting equation. So when assets increase, we debit. So it means for all the assets account, the normal balance would be on the debit side, okay? On the debit side, the normal balance, because the normal balance is on the increase side, okay? For liabilities and owner equity, you remember they are on the right side of accounting equation. So when they increase, we credit. So the normal balance, okay, the normal balance would be on the credit side for liability and owner's equity or owner's capital. For drawings, remember when drawing increase, owner equity decrease, so we debit, right? So the normal balance of drawing would be on the debit side. And similarly, normal balance of revenues would be on credit side, and normal balance of expenses would be on debit side. Okay, so summary of debit and credit rules. So you remember for assets, we when it increase or when expense increase, we debit. For liabilities, owner equity and revenues, when they increase, we credit. Okay. And for liability, equity, and revenue, when they decrease, we debit. And for assets and expense, if they decrease, we credit. And remember that every transaction will affect at least one asset and one liabilities account. Total debits must always equal to total credits. Okay. All right, so that is the end of the first clip of chapter 2. You can continue to watch the second clip.